Hello and welcome to this special edition of Market Editor. The markets may be our starting point today, but we are diving deeper into a space that's buzzing with opportunity. India's emerging dominance in the CRDMO space, we call it CDMO, contract research, development and manufacturing. And to help us decode this theme is none other than seasoned investor and market veteran Madhu Kela.
That's right. Over the next 30 minutes, we'll spend a few minutes on Madhu's current take on the market, but the spotlight is firmly on a sunrise sector where he sees immense long-term potential. We'll also be joined by the managements from Laurus Labs and OneSource Pharma, two companies at the heart of this CRDMO story, with Madhu turning interviewer, asking them the key questions on scale, strategy and science.
Well, from investment insights to industry deep dive, this promises to be a power-packed half hour. Let's dive straight in. Madhu, welcome to the program. Thank you very much.
Thank you so much.
And we can take a back seat today.
No, absolutely. We'll all do it together.
Hum aaram karenge, aap kaam karenge.
We'll all do it together.
But I think you've done so much work on the entire CDMO space. You and your team have really done a fabulous. I mean, we'll try and get at least a fraction of it on the air as we go forward. But since we have you with us, Madhu, I want to start with just a quick view on the markets per se and where we are. We've come a long way from the lows. What is your perspective now?
Prashant, I think from a big picture perspective, we have spoken this many times. I would once again request that people must not extrapolate what has happened post-COVID in terms of return, in terms of finding multi-bagger opportunities where money has gone from 10 to 100 times, right? Because the lows were so drastic, the returns were fabulous, right? So I don't think that we must expect those kind of returns. Having said that, I am not in a camp that the bull market is over and this is the beginning of some bear market, and you can take the number reference from wherever you want. So if you take the reference from COVID low, then the returns will look very, very attractive.
Correct.
And hence the next 5 years may look very dim. But if you take the same base from 2013, when the market was at a low, then it is again average return which the market has delivered, including the last 5 years. So my point is that India is and will always be a bottom of a stock pickers market, wherein the broad indices may give you nominal returns. But because of the volatility and the fluctuation, and because there is choice of so many sectors, you have the opportunity to make, in my view, 15 to 20% kind of return is still in these markets. And you see what has happened in the last 2 months. Take, for instance, the financial sector. There are so many NBFC companies, even smaller banks, even large banks. While the markets have gone up only 7%, but a lot of these companies have gone up like 20, 30, 40, 50%. Right? So that is the market which we are going to be seeing from now on.
Very disaggregated, maybe stock specific, right?
Exactly.
Within sectors, not everything, but...
Exactly. You have to be betting not only the right sector, but the right company. So we are back to basics.
You turned cautious, I think, around the time that the market topped out. I mean, September, October last year.
Exactly. And we had a detailed interview at that time.
So one sector which you're very bullish on, and you have been, is pharmaceuticals.
That's right.
I mean, we're going back 7-8 years back, and you've spoken about stocks like Divi's Laboratory. So first, the big picture. Pharma has done well, if you look at it over the last 5 or 10 years. But you're bullish on it for the next 5-10 years. What do the numbers tell you?
It is, when we did, and thanks to the CNBC team, you made me a student again. So I think we actually did some numbers, and numbers is so heartening. In 2005, the total industry size of pharma was 28,000 crores, including API, local, everything put together, and profit were 2,500 crores.
And we have those graphics which will come up, which will very starkly put out, please.
This, Prashant, has gone to 6 lakh crores. And this year, the profit will be 80,000 crores. So after IT, this actually is one big industry which has got developed in the last 20 years. So many great companies, Divi being obviously one of the most biggest wealth creator, but so many great companies have come. And from where we started, merely as a API supplier, that's how we started. We went into generic, then we went into complex generic, then we went into, local markets have grown. And now the CDMO opportunity. So the margin which used to be 10 years back, the overall industry margin which used to be 15% has now gone to around 23%. And you look at the change, right? Today, in the total FDA facilities in the world is only 1,425, out of which 396 plants are there in India. So you are talking about 28% market share in US FDA plants, while our market share in terms of global CDMO or global pharma is still very minuscule, right? Total size of the global pharma industry is $1.5 trillion, and we are still, let's say, 6 lakh crores.
Yep.
So it is still very small. So I am quite positive that over the next 5, 10, 20 years, this industry has a lot of legs. And what came out clearly was, obviously it's a very long gestation industry. So you need to make upfront investment. So the size of the profit of the industry still was so small, even 10 years back, that kind of investment was not possible to be made. But now, with the size of profit increasing, like this year, cash flow will be 1 lakh crores of all pharma companies put together. And the size of the whole industry 20 years back was 28,000 crores. So I think once this cash flow starts getting on the ground, the opportunity will
That number is very stark. And again, I mean, those graphics will come up again. 28% of global FDA-approved facility was 4% of sales.
Exactly.
Is that because of scale? Plants here are much smaller. Is it because of the kind of products which are manufactured?
And also, it is also because of that, it's a transition. Pharma is a very sensitive thing. So quality, when you look at it, there is still inspections which happens in Indian plants where they are still able to have quality issues. It is also got to do with scale. And also, let's not forget, when N-1, N-2, we are still dependent on China for basic stuff like solvent, starting material. When all of that shifts to India, which I think will happen in the next 3-4 years, because see, if you are a global major and if you are placing your bet on India, India is still sourcing those material from China. So that to that level, your cost competitiveness is not established. But Prashant, this is all work in progress, in my opinion, and we are in the right direction. What is most startling, in my view, the global CDMO industry, which is, let's say, roughly $200 billion, we are only 8 billion, which is 4%. So our market share in FDA-approved facilities is 20%, and there it is only 4%. And it is like, everyone knows that the cost of manufacturing in the US and UK, which is 65% of the total global CDMO industry, is very, very high compared to what it will be in countries like India and China. So if you take a 5-10 year view, incremental growth definitely will shift, and some amount of market share will shift to countries like India and China.
Got that. So that sets the base for the next leg of the conversation. We'll take a break, Madhu, and on the other side, Madhu will turn interviewer, and he'll be speaking with 2 companies from the space, and he'll ask them the size of the opportunity, which he believes to be strong. But we'll really get into it. Laurus Laboratories and OneSource Specialty Pharma, the 2 companies you'll hear from Mr. Chava and Mr. Sharma, are with us.